Michael Saylor has publicly stated that he intends to buy Bitcoin forever. By the way, thank you all for the likes. I can see the little love hearts coming, and I appreciate each and every one of you. So, to what extent does maximizing Bitcoin holding outweigh MicroStrategy share dilution? I want to be on the right side of the financial jiu-jitsu. Yes, I love the way you say that, because that's exactly what I call MicroStrategy. They've got the ability to do financial jiu-jitsu, not like an ETF or ETP or other type of fund. They can borrow, they can lend, they can lever up, they can issue shares, they can do all sorts of things to really maximize the returns. Also, they make profit. The profit from their software business goes into buying Bitcoin as well. But let's look at exactly the good and the bad of dilution. And this is happening as well with the miners right now. And that's what you need to take into account. Some of the miners are up nearly 100% dilution over the last 12 months because they are issuing shares instead of debt to buy rigs. And that's kind of clever, because after the halving, things are going to be ruthless. So they need to build scale right now. But Michael Saylor's decision to increase his Bitcoin holding by diluting MicroStrategy shares does carry inherent risks. So on the one hand, if the value of Bitcoin continues to rise, Saylor can use the proceeds from the share dilution to acquire more Bitcoin. And this potential outcome could lead to substantial gains for MicroStrategy shareholders over the long term. Okay, now conversely, this is the important piece. If Bitcoin price declines, MicroStrategy could face negative consequences. Share dilution would diminish the value of each share. And in the event of significant Bitcoin price decline, MicroStrategy could potentially face financial distress, maybe lead to bankruptcy, etc. It could be really ugly. But the outcome of maximizing Bitcoin holdings versus MicroStrategy share dilution hinges on the future price of Bitcoin. Okay, his whole gambit is on the price of Bitcoin going up. And if Bitcoin persistently appreciates, which I believe it will, with some undulations, of course, Saylor's strategy will prove to be very advantageous. So let's look at the mechanics of what they just did with exact numbers. The numbers I pulled publicly, so I don't have access to the Saylor books, but these are the numbers I was able to pull out from the actual deal. The last tranche or slice of dilution. MicroStrategy recently announced it had purchased 12,333 Bitcoins for $347 million. They did it over the space of about a 12-week period. The average cost per Bitcoin was $28,135, which is not bad. The price of Bitcoin right now, as we speak, is $30,535. Okay, so they're in the money on that trade by, call it $2,300, $2,400. So it's not too bad times that amount of Bitcoin. Now, the company funded this by selling 334 million of its own stock, which was a 12% stock dilution. But remember, you got to think in terms of the perspective. Okay, they bought a big bag of Bitcoin. It was actually at a lower price of their average purchase price since they started buying Bitcoin in August 2020. So that's not bad. And 12% dilution, if you look at the stock price now, it's still up. It's $342. A few days ago, it was 300. So again, their gambit is on the future price of Bitcoin. And many believe, including myself and some of the most intelligent people on earth, it's going to go up. But please don't be worried about quantum computing, etc. Not a concern. And what Saylor did as well in the last 6 months is they paid back the Silvergate loan. So the debt load they have is not as much as it used to be.